Ladies and gentlemen, ever wondered what it takes to trade like a pro in Malaysian derivative market? Moving on, we are thrilled to present you our Meet the Pro Fire Chat session, offering a unique opportunity for us to gain insight from seasoned traders. Our moderator of the day for this session, let me present to you Mr. Darren Lingi, Senior Executive from Product and Market Development, Bursa Malaysia Derivative. Next, allow me to introduce our distinguished speaker for this session. Please welcome Mr. David Low, Managing Director of Top Infinity Sdn Bhd. Let us welcome Mr. Jeffrey Bujang, Chief Executive Officer of Propex Malaysia Sdn Bhd. Finally, please welcome Mr. Kenneth Lai, trader from Synergy Link Capital Sdn Bhd. Now, I would like to hand over the stage to Mr. Darren, the moderator for today Meet the Pro Fireside Chat session. Darren, the floor is yours now.
All right, thank you, Daphne. Good morning, everybody. My name is Darren. I'm from the derivatives market team. With me today, I have three seasoned pros from the industry who would like to share and discuss their experience trading professionally. To my left, I have David Low. David Low is a managing director of Top Infinity Sdn Bhd, a proprietary trading firm that specializes in trading global commodities, currencies, equity indices, and financial derivatives markets. David has over 25 years of experience in the listed derivatives industry and has held leadership positions in future broking divisions of major investment banks in Malaysia and was the past president of the MFBA, also known as the Malaysian Futures Brokers Association. As a fervent believer in trader education, he has spoken in seminars and workshops to over 5,000 retail traders on trading Bursa Malaysia derivatives, as well as the Chicago Mercantile Exchange, Singapore Exchange, as well as the Hong Kong Exchange markets. His work includes live trading sessions and webinars. He is also the managing director of New Pinnacle Trading, a trading education provider specializing in delivering comprehensive trading programs for all traders of all experience levels. Next, please join me in welcoming Mr. Jeffrey Ghazali Bujang, the CEO of Propex Malaysia Sdn Bhd. Jeffrey has nearly 25 years of electronic trading experience, 20 years of imparting his knowledge with junior traders, and 7 years of trading FCPO. He has excellent communication and presentation skills and has appeared on panels organized by the Futures and Options Role, and most recently at the 2023 Palm Oil Conference, hosted by Bursa Malaysia Derivatives, which we will have again next year. So yeah, stay tuned for that. Finally, I'd also like to welcome Mr. Kenneth Lai, a trader working with Synergy Link Capital Sdn Bhd, and he has become a part of Synergy Link in 2024 after completing BMD's first ever futures trading apprenticeship program. He focuses on indices and commodities futures spread trading across Asian markets. His journey in the financial industry started in 2011, working as a buy-side analyst with RHB Islamic International Asset Management, formerly known as OSK UOB Islamic Fund Management Berhad, before moving to work with the sell-side equity analyst at Bank of America Merrill Lynch, Singapore in 2013. He graduated from Monash University with a Bachelor of Robotics and Mechatronics Engineering and is also a CFA charter holder. Fun fact, when he isn't trading, he also owns an F&B business, which I will ask you about later on. So if you want healthy food, he's your guy. Okay, let's break the ice. So how did each of you end up pursuing derivatives trading as a career? So David, would you like to start off?
Sure. How much time do we have? Once upon a time. Oh, yeah. We're going to give him pressure, huh? Okay, so that he needs his passport. You get. Okay. Yeah. Okay. It's actually a long time ago, right? I was young. I was foolish. I was in the wrong place at the wrong time. 1993, KLSC, the super bull run, right? That was an amazing bull run. I was on the wrong side of the market, wrong end of the bull run, right? So at the time, at the end of 1993, at the peak of the market, okay, that's where I got in. And at that time, it's very unusual. In that time was the Kuala Lumpur Stock Exchange, right? At that time, you don't need to put money if you're a broker to trade, right? And then you can hold your trades for 7 days, okay? So without much capital or none at all, okay, without any experience, we all went in, okay? At that time was crazy, everybody goes in. So I lost a lot of money, okay? At the time, being young as well. And, but what I realized was, hey, this is an opportunity, right? I saw the opportunity, I saw the money, and I said, this is an industry I have to get in. So in 1995, when the exchange opened to trade stock index futures, the first contract for financials, I joined as a broker, and the rest you can read from my LinkedIn.
All right. Thank you, David. Jeffrey, would you like to share?
I've been speaking all week without a mic, so I don't know how to use this. Hello, Tess. Yeah. I think, like David said, sometimes circumstances or the people who you hang out will determine where you're at in life. So my situation was my granddad. My mom's Irish, my dad's Malaysian. So what sparked my curiosity was every year my granddad would give me £5 as birthday money. So every year the conversion rate was slightly different. So one year you get 20 ringgit. This is when the ringgit was extremely strong, relatively strong. One year you get 20 ringgit, one year. So that kind of like sparked the curiosity. As David mentioned about the KLSC bull run, I think a lot of you will not realize that the Kuala Lumpur Stock Exchange was the most vibrant equity market in the whole wide world. It traded more volume than Wall Street. That's just facts. And we had I was at school at the time. I was a teenager, and you can see teachers. This is the pre-mobile phone days, right? You have teachers queuing up behind the payphone, trying to call up your broker. So we kind of knew what was going on, and teachers are changing their cars every couple of months. Okay, you can become a teacher. You can go to the payphone, you pick up the phone, and the next month you've got a nice fancy car. So that kind of sparked the interest. Obviously with education, and when I was in London, I had opportunity to join a prop trading firm. So I was that's how it all began, nearly 25 years ago.
Thank you, Jeffrey. Kenneth, would you like to share?
Yes. For my experience, it's definitely not as in-depth as compared to Jeffrey and also David. So I actually started back when I was in one of my very first job in 2011. So I was in OSK Investment Bank. So I actually dabbled with futures, trading FKLI, FCPL and whatnot in a very small volume. And of course, during that period of time, profitability was not there. In fact, lost most of the money. And but during this period of time, I was also still trading, but of course, not with a lot of success, definitely. But it did not really take off until the FTAP actually. It did not really take off really serious in terms of futures trading after I completed the FTAP trading, which very, very much involved in futures every day, day in and day out right now. Now my blood basically flows together in the market. When it opens, my blood will flow. When the market is not running, my blood also feels like it stopped running. So yeah, so basically that's how I get into the futures market.
All right, thank you guys. I would like to pose a question to Kenneth. We talked about your F&B experience earlier, so we want to know, how does your derivatives trading career blend with that F&B business part of your life?
Yes, so I do own an F&B business before actually getting into futures trading actually. So I'm currently still owning it. It's definitely not an easy thing actually, because actually both of them are actually independent of each other. Trading has got its own characteristic. F&B also has got its own characteristic. So they are both running independently from each other, and it both requires a different kind of skill sets and a different kind of requirement as well. So does it really blend together, or does it really drive together? I don't think they really blend together as much because of the business nature itself. But how do I, if you ask me, how do I manage them, of these two very independent business, is that at least in trading, there are trading hours, and there are off days as well. There are what they call that. There are market where they goes to rest. So that is the time where I actually, when I first started doing futures trading seriously at the beginning. So I have to really manage my time very, very properly actually. So when it's during trading hours, I make sure that I learn as much as possible, especially when we have just only started in January, like really, really serious. And then during lunch hours or during after market hours, I will handle the business itself. So they are both handled pretty differently. But of course, as time passes, right now, I'm very, very fortunate to have a very good team of people for my business, which we can hire and run them together, so that I can focus on actually really doing the futures trading itself. Yeah.
All right, thank you. Jeffrey, I have a question for you. Being the main trainer of the FTAP program, the third intake, what are the common characteristics or quirks that you've observed amongst new traders? I'll give you some time to think about it.
A difficult question, especially having to answer it in front of them right now. The ones who were laughing know exactly who are the current students of FTAP number 3. I'd say that when everyone comes in on day one as a trader, they have this misconception of what trading is all about. I think the questions are quite interesting on the first day, and as we progress over the week, they start asking different questions, they're starting to get it. So they have this misconception that there's only one way to skin a cat, meaning that there's only one way to trade. And when they walk in the door, they have this belief that it is one way and the only way. So our job as educators is to provide them different avenues of making money, different strategies, because there's no such thing as one size fits all. Everyone's got different risk profiles, risk tolerance, but at the end of the day, they can achieve the goal of being profitable. So I use the analogy with them is when they walk in, my job is to break down that firewall, and some will take longer than others. But I think today on day 6, day 7, I've managed to get through, and hopefully on this coming Monday, they will be able to see the big picture. Yeah.
Thanks for that. David, as our education partner for DVTC 2024, what would you say are the key takeaways, misconceptions, and top tips that you would like to share with the audience about pursuing trading as a full-time career?
Wow, that's a big question. Right? The short question is, what's the secret of trading? You all really want to know the secret of trading? Really? Yeah. But the answer will disappoint you. There's no secret in trading. Yeah, it's all hard work. Okay? So I hire traders, and during the interviews, I normally try to discourage traders. I tell them, why do you want to join the hardest profession of all? This is tough, you know, right? A lot of people have this misconception and this very, I don't know, the hype comes from probably the internet and YouTube and all that, right? Saying that, oh, trading, you can make easy money, you can get rich quick and all that. So they don't realize that there's a lot of work to it, right? I think the FTAP guys, once you start doing it, you know, it's damn, excuse for the word, damn tough. Right? So a lot of work needs to put into it, okay? And this is something that you have to dedicate and put in your commitment into it, right? So it's not something that you can immediately master, right? Because trading is a skill, right? The skill that, you know, you can't read a book, okay? You can't like read a book and ride a bicycle, right? Yeah, you can read a book on how to ride a bicycle, but you know, you have to ride a bicycle to be able to ride a bicycle. So the same thing about trading, right? And it takes probably a couple of years, okay? You have to master not only the method, the methodology, you have to master your risk and money management skills. And the last and the most difficult thing, which I see from my traders as well, is to master that mindset, that trading psychology, to be able to take losses, to be able to be disciplined, to execute your plan. I think that is one of the very important things to know, right? So in terms of tips, I think you you need what I usually call the four C's. The four C's. Number one is you need capital. Okay, so those of you who, if you're not in the FTEP program, I hope that one day you all can join the FTEP program, right? But if you are going to embark on trading full time, okay, capital is one of the most important ingredients in it, okay? Not only your risk capital, but let's say, for example, you want to, okay, now I think my skills are good enough, I'm going to go in, I'm going to dive in straight, I'm going to quit my job, I'm going to kick my boss out of my life, okay? You need at least a year or 2 years expenses covered, and that's not your risk capital, right? Your risk capital is your risk capital, but your expenses to cover so that you can trade with a very, very clear mind, okay? You cannot be thinking about, okay, well, this trade, when am I going to buy the baby food for the kids and all that, you know? Am I going to, squander away my children's education on this venture? No, you got to have that covered, right? It's very, very important, especially for your trading psychology. So that's the first C, capital. Okay. Number two is control. Risk control, discipline, money management. This is very important, right? You may have the methodology, but if you don't control yourself, you cannot have the discipline to put in all this process to manage the risk, then also a problem. Okay. The third one is, I think it's very important. I call it coaching, but in a large word, is education, right? You need to have the proper education, okay, from the proper people, okay? Get it from traders who trade lah. Okay, don't get it from some sweet young thing, 22 years old, say this is the best stock in the world now, right? Usually that's not going to work for you, all right? So that's the third C, coaching and mentoring and educating yourself. And I think the last one is a community, right? You need a community of traders as well, right? Trading can be very lonely, right? So you need to find people of the same thoughts, people of the same mind, to help support yourself as well. I hope that answers the question.
Yeah, that was a very nice answer. I think what I would like to follow up is, what about those who are looking to pursue it part-time? Like, for example, you have a 9 to 6, and then you like to look at your phone. There's so many platforms out there. What about those who want to trade part-time and they want to make that a significant part of their income? What would you say to that? What would be the biggest misconception that you like to address?
Okay, I think what is interesting is trading part-time or whilst you're having a permanent job or business, I think it's a great arrangement, okay? Because you need the time to progress and learn your skills, okay? And if you have something you're doing and you're doing on the side, it's a great way to gain experience while not sacrificing in terms of your income or your livelihood, okay? So I used to do that as well, right? Whilst I was in the investment bank, okay, I was allowed to trade, of course, needed to be compliance to sign off. I still could trade, okay? So I traded, I couldn't trade Bursa Malaysia, of course, right? Because daytime job, okay? My boss would say, I hired you or something not to come and trade Bursa Malaysia. But I traded CME products, right? And CME products was like at night, I trade crude oil, I'll trade gold, okay? And that was a great thing. I could have a side income as well, right? Kind of a side gig. And then also polish up your skills. So I think I would encourage everybody when you're starting on your journey to do that, okay? That's one of the best ways to do it before you actually convert to become a full-time trader.
Yeah, well said, well said. I have a question for all of you, so be prepared. Fun fact, I met a couple of my broker friends for a catch-up, and we had this thing called a dealing simulation back hosted by the PPKM, so the Persatuan Kewangan Malaysia. We had instructors from Australia, and they basically told us, they kind of screamed at us actually. They said, never talk about your trades because, well, that's a rule. You're not supposed to talk about what you do in the office. But what they did say was, people tend to share what they lost. It's usually a funny story about like, oh, guess how much I lost, you know? Guess what happened when I did this or did that. So the question that I'd have for all of you, how do each of you handle situations when a trade doesn't go as planned? And what steps do you take to correct those situations? Do you reverse this trade immediately? Do you just stop it immediately? What do you do? What's your thought process? How do you even know if it's a wrong trade? Because I think sometimes when we paper trade, we always hope that something will happen in our favor. But like people say, hope is a dangerous thing, right? So I'd like to start with, I don't know, who would like to start? Kenneth? Yeah? Okay.
In my case, I'll wait for the margin call first. But just kidding. I'll wait for the margin call. But sometimes we do wait for the margin call. But if it really goes against our trade, I think our position, I think the first thing to do is really to cut it. I think if it really goes too much against my position. But of course, definitely this is something that I'm still refining on how do we do that. So perhaps this question can be best answered by David and Jeffrey actually, on what do we do about it.
Jeffrey, yeah, floor is all yours. I'm wondering. Yeah, I see you thinking.
And everyone has got a different style of trading. I think David mentioned earlier on when he had a full-time job, he used to trade CME products at night. And we know that kind of trades index or FCPOs, I'm assuming index or FCPOs during the daytime. So my background mainly would be trading interest rate products. So that's where I was trained. And I kind of deploy similar strategies at FCPO. So what I do is I run a book. Run a book means that you have positions across the board, and I always have a position. I'm never flat. Now, the question is, how do you get out of a position? And one of the many questions, like on a trading platform, a lot of the FTAP users say, is there a button where I can liquidate all? I think for my platform, that's probably the most dangerous functionality to have, because if I accidentally press that button, a lot of trades will be going up and down, up and down, up and down, and I'll probably be giving free ticks or gifting ticks to the market. So what I tend to have is, because I've been trading for a while, I've got the experience and the style of trading. What I tend to have is like a monthly stop loss, a weekly stop loss, and then a daily stop loss. So as long as I'm trading within my parameters, I'll still maintain. I'll say 95% or 98% of the time, I haven't been in a situation where I had to cut all of my positions. But there was a incident in if I remember the date correctly, 2013, when Ben Bernanke, the Fed at the time, he removed quantitative easing, right? So what that means is that they were going to stop buying bonds, and the bond market obviously collapsed. So at the time, I was trading the Aussie interest rate. I was actually in London at the time. I was about to catch, I don't know what it means, catching flights, but catching a flight back to Singapore. The rate announcement was then. I said, okay, great. Right? I said, great. I didn't have a position at the time. It was probably one of the few times I didn't have a position. So I'm back. So the Aussie bond market came off a lot harder than the US, which kind of like, it doesn't make sense, right? But so I thought, so I'm getting in at better levels than my other colleagues on the Friday. So the Aussie bond market has come off 30 basis points. I think that's a good place to start my structure. And then what happened on the Monday, I thought, okay, I've got a very, very good trade on. Things are going to be great. The first opening print at 5:30 in the morning. And this is at 5:30 in the morning, right? Wake up to see that the loss kind of doubled. So you go, okay, what do I do now? So my hedge was in a correlated market in the US. And at the time, the US hasn't opened yet. So you get 1 hour of, waiting what to do next. So to cut long story short, I spent 40 hours in the office. I didn't leave the office. I was in front of my screen, no sleep, and I had to manage the position accordingly. So my risk manager at the time, he wasn't really concerned about my dollar amount. He was more concerned about my emotional and mental well-being. So he'll just ask me, okay, Jeff, he has my position, but he's just trying to have a conversation, a communication. He's like, Jeff, what's your position now? Okay, position's smaller. He said, okay, he goes, keep at it. And he rings me up again 3 hours later. The position's high. So he can see I'm actually trying to do something about it. But if I was just sitting down, doing nothing, hoping, he'd probably say, Jeff, get out. So everyone's kind of different. So after 2 days, after losing a lot of money, it came all the way back. I kind of scratched the trade. Scratch means you bought and sold the whole book at a loss. And I took 3 days off because I was just exhausted. But the weird thing is, like, a week later, everything came back. So I always say the market can remain irrational and it can remain liquid. So that's how I kind of like dealt with my biggest loss. In a way, I was like fortunate enough I wasn't in a position to cut. But in hindsight, without having to go through that pain. It's like no sleep, but at the same time, I do get a, education or lesson out of it to make sure that, hey, even though you think that this should happen, if I cut my position, took a day's rest, return, I probably would be able to make money in the end as opposed to break even. So I'm not too sure it quite answers the question you're asking, but it's just a different perspective.
Yeah, thanks for sharing.
My turn?
I see you thinking also, David.
Yeah, I think this situation is, to me, it's very clear. Just take your medicine, right? Do the cut loss, okay? If you can't cut loss, you will take the mother of losses, or you will cut loss, the biggest cut loss that you will ever do, okay? Usually when the account is almost zero, okay? And I've done that before early in my, kind of like when I first started, right? And this was a story that I told on YouTube as well. When I first started, even before, slightly after 1993, after the experience. So I learned a bit more after the experience in the stock market. So, delved into charts, had a meta stock program running, and then say, okay, I thought I can. Okay, so I gathered up a few friends and we sort of got some funds together, 20,000, right? They gave it to me and say, okay, let's trade. I told them I can trade. Let's make some money together. They trusted me. So I went and traded. And at that time we were trading FX. Okay? So I remember this very clearly. It was a Friday evening. It was the evening of the non-farm payrolls. Okay? So rule number one, a lot of people say don't trade during that time nights. Okay? But I was, again, still foolish. Right? So 20,000, they gave it to me in the morning. So, okay, banked in already, you can trade. Okay, margins all open up. So non-farm payrolls, very exciting day, I thought, right? So I went to long the sterling, right? So 8:30, the numbers came in, boom! I was in front of the Reuters chart, the whole one line down. Okay, so some major announcement at the time. So, okay, down. Okay, what to do? So, being still new, buy some more, right? Everybody does that. Buy some more. Buy. Boom, some more, right? So, by 10 o'clock, the money they gave to me, the check wasn't even cleared, was all done. I cleaned up the whole account in one trade, right? So that was one of the very painful lessons, because these were my very best friends, right, from school. Right? And one of them refused to talk to me for 20 years because of that, right? But the thing is, you imagine, today they give you a check, tomorrow you say, your money's all gone. How are you going to explain to your friends like that, right? It was so painful, right? So from that lesson, from that day onwards, I committed myself to always take the medicine. If I'm wrong, the trade doesn't look good, you get out first. Then you can think properly after. When you're in a trade, you're a different animal, right? You're totally like, you are sane before you press the button to buy or sell. After that, you are a different kind of person, right? So to me, I make it a very, very disciplined thing to take my losses, to take my medicine, and then you have the frame of mind to rethink your trade and review your trade and see whether you did something wrong or it was actually a good process. So I think I encourage those of you to have a very disciplined approach in taking your stop losses, okay? Go in with a predefined risk, and when it comes to that, just take yourself out of the market. I hope that answers.
Maybe I can add on a little bit about that also from my experience as well, from experience that's got not so as many years as David. So I think what some of the like less experienced traders have, right? I think a lot of the strategies is really hope. I like what you were saying right at the beginning. So just like what David was saying, once the prices came down once, right, when you were there at that time, you were hoping that it will go back up further, right? So that strategy there was really hoping, and that is not a very long-term strategy. So it can work, it can really work, and it can go back to your original price that you want, but it does not really happen all the time, right? So it can happen like maybe 20% out of 10 times, but 8 out of 10 times may not work. And that is the strategy that I think for a lot of people are actually hoping, which is a hope strategy which does not really work long term. I think that is what maybe David has learned over the years, and bit also, Jeffrey learned over the years that hoping is not really a strategy. Yeah.
Yeah, just to add on that, I think going on AI, and I'm sure there'll be some AI related questions at some point. You can just go into ChatGPT or to develop a trading strategy, but you'll be very, very surprised when quant trading started to become big, say 6 to 8 years ago. There was a huge course in Singapore organizing a QuantCon, and they tried to open quant to the masses where, it's open source. You can put up your idea, you can download. And when I attended one of the workshops was a very basic risk management course. And I'm going like, I'm seated with the smartest guys in the room. Why do they need such a basic risk management? Can't they even Google that up? And I spoke to one of the professors, and he said, like, if you go around and look at all these strategies, they don't put any risk parameters in. They just look, they show you the end result, but they don't show you what happens in between. And I think the in between was the kind of the question is like, look, like I said, at the end of the day, it did come back, but the process you had to go through, the pain you had to go through is probably not worth it. It could be, it could mean like even losing friendship, right? We're not talking about just cash, friendship, family. So that's why risk control is actually very important. And to the AI questions later on, or potential AI questions later on, think, before you ask that question, is my risk control in place?
Yeah, that's really well said. I think the hype around trading, I would say it's somewhat glamorized, but what they don't show you, you see all these videos, they show you like, oh, like life as a trader, you wake up, you do all these things, like you key in your trades, but what they don't capture, I think, and what you guys said very well, very beautifully, is what happens when it actually goes wrong. Nothing in life is guaranteed, right? So knowing your limits, the 4 C's that David said, you guys heard from Jeffrey himself, like what he did, the 48 hours, right? Yeah, I would cry at the end of that. Yeah, 48 hours in the office. So all these things are very important for you if you want to get into this world. We're not trying to scare you, but just know your limits and know yourself. That's what we're trying to say. So with that said, I have one final question before we move on to the Q&A. What's the starting points for each of you when it comes to your strategy? What do you choose? You see the screen, you see all these things. How do you know what to choose and what to do for the day? Yeah. I'm watching
What are my tools? I think when you've been involved in the market for a very, very long time, you're able to see stuff on a visual basis. But I'll probably break down what, I kind of teach the FTAP cohort, in the last week. I think my trading strategy is I like to trade spreads. And the beauty about trading spreads on Bursa Malaysia is that it is actively traded. I believe at least 30 to 35% of the daily volume is traded on the exchange-traded spreads. So basically, there is no execution risk. So you pick the direction, so when you trade spreads, it's a combination of 2 different contracts. So I like the concept. For me, it's relative value correlations. I can't pick direction. My students will tell me, I don't care whether the market's going up or going down or how far, the velocity. I just believe in a concept of correlation, and I will run a lot of correlative studies versus similar looking contracts or other correlated contracts. And that's how I start. I get the data. We create some ratios. We use some quantitative tools that come up with it, and we backtest using historical data. And we're able to see during this time of the day where it is in terms of standard deviation away from the mean or from the moving average. And that's how we kind of like generate most of my trade ideas. And it's based on the concept of it always comes back, but till it doesn't. So but at the same time, the mean does move. So It's nothing too fancy. I think someone with some very basic programming skills will be able to do it. But I come from the school where I can't program, so I have to do a lot of things visually and using tools which assist as opposed to doing it on my own. Some people think, okay, I don't have these expensive tools, but it can be done if you have this programming skill set. So that's why a lot of trading firms over the years, they kind of like marry quant programmers together with experienced traders. They sit them next to each other because they both speak a different language. Like I said earlier, the quant guys will say, hey, this will always work, but they don't understand the trading mechanics, like bid offer spread, or to be able to actually get fill, the market has to trade through, versus like the quant meeting, okay, trades one lot, it means I'm guaranteed fill. So you got to put that into consideration. So there are many ways to, in a nutshell, there are many ways to do research, but you have to do research based on your own skill sets as well. You can't think, okay, I'm going to be a quant trader when I can't even open an Excel spreadsheet.
Yeah, well said. Yeah, I think programming is a huge skill that I advise all of you to take, even an introductory course. Okay. Due to time constraints, let's move on. Let's move to the Slido questions. So, could I have the QR code at the back? So, we will have a QR code at the back, and what you can do is you can submit your questions there. And what I'll do is that we will allocate accordingly as to who will answer the question. So, you should be able to see it here. If not, some of you are sitting behind the pillars. It's right behind you as well. So there's a QR code there. Feel free to scan it and then submit your questions for our 3 pros. Yeah, David, we'd love to hear about your experience.
All right. Okay, I'm what they would call a systematic trader or method trader, right? I'm not a discretionary trader. So the difference is this: a discretionary trader looks at the chart, okay, or looks at the news and studies the market, looks at the events happening around the contracts that they trade. Okay, let's say for example palm oil, and then ting in his head says, yeah, I think I can buy, I think I can sell, okay? When you say I think or I feel, you are a discretionary trader, okay? I'm not a discretionary trader. I go by a system, right? So I have the process, I have these steps that I have to follow. Let's say, for example, 5 steps before I initiate the trade. So every morning when I do the trade, I'm a breakout trader. So when the market opens, I'll see whether the conditions are correct, meets my criteria, and then I'll fire my trade. And after I fire, I'll manage my trade. So in that sense, in a short answer, that's actually how I execute my trade and my process that I do.
Love to hear from you as well.
Yeah, definitely. So at least how I would start my day as well is definitely to be getting up to date with whatever news that's happening overnight. In the morning, read up the news and what's been moving the markets, right, in the morning itself. And then before actually starting the day to trade, definitely look at the positions, overnight what has happened. And then for the day itself, I think you pretty much have got a system or a process of what gets you into a trade. So you don't just get into a trade because I feel, I think, like they must say. That is not, I don't think that is very sustainable as well. So there's a very systematic way for you to get into a trade or to get out of a trade. So right at the beginning of the day, you'll be looking at all these systems or all these positions or all these things that does it fit your criteria. And then sometimes it may not fit into all these criteria. And then it probably only fit into your criteria going into the middle of the day. So you'll be monitoring all these things right at the beginning of the day and then throughout the day as well. So if it really gets into that, then you get into a position. Yeah. So that's basically what we do.
Can I just add, like, I think we might get some questions, what is your view? And I tend to say, like, I think I characterize or categorize the view to as I think and I feel. I say a common thing, like, if you want to have a view, look out the window. But unfortunately, at the Bursa Trading Arcade, there is no window. So if you see the group walking outside, looking at, that's where the view is.
Yeah, I noticed them like looking, like they're holding their food and they're just looking around. I'm like, okay, F that for sure.
So please don't ask us what the view of FCPO was in 2025. We leave that for the experts at POC next year.
Yeah, POC, don't forget. Let me see some of the questions here. I like this one. How do each of you handle a black swan event? So an event such as the coronavirus in 2020, certain market crashes. I mean, some of you have like years and years of experience. So some of you also lived through the 1997 financial crisis. How do you handle that? Do you take advantage of it? What do you do?
Okay. Outside the recent incident, I think that's about 2 or 3 years ago. Yeah, POC. We were right in the POC, and then Indonesia announced that they are going to stop all exports. Right? Boom, and that was lunch, right? And that was a crazy trade, okay, because I was short. So market just flew, right? But then, even though I had the stops, right after 2:30 when it opened, it was a huge loss, right? So I think these things can't be helped, and I think these things are going to occur a bit more often these days if we hold over the weekend positions, right? So and people like to press buttons during the weekend somehow, right? They like to launch their rockets during the weekend. So you get a lot of this coming in, I think, more often. So one of the ways to do it, of course, you could trade spreads, which is a good way to go through the weekend, right? Yeah. Or you could do options, right? You do options. So those are some of the strategies. But of course, if you're an outright trader, you are open to those kind of situations where markets gap, especially across the weekend. Yeah. But then you can see even in that situation, across lunch, you too can get it. I think it's something unavoidable. But if the situation comes, we just have to bite the bullet. If it's not really going for you, then you just really have to get out, even though at a big loss. Yeah.
Kenneth, Jeffrey?
Yeah, probably I can answer this also. I think this question refers to more about the remedy rather than the prevention. They always say that the prevention is better than cure, right? So to not get into that position of getting caught in a black swan event, I think one of the best ways is to prevent yourself from getting into these black swan events. Most of the times, during big announcements, during huge economic data, these are the time of period where we will try to not get into positions because it can really go either way. So at least from where we are coming from or how do we handle this or to prevent black swan event is to prevent it right from the beginning as well. Just not get into that position. But if you really, really has to get into that, if you are really into that black swan event already, or if you are really experiencing that and it's a very painful experience, I've also just experienced it a few months ago. A lot of the time, I think is really still the better way is to cut the positions. And then, at least for myself, I will say that, I've cut my positions. I will give myself maybe another week to recover my positions. I recover my profits, recover my losses. So I tell myself that, okay, I take my losses, but I will also give myself some time to recover this. And what we have to continue doing is just continue doing what we do. Just keep doing it until eventually just recover back whatever losses from the next one event. That's the remedy part of it. But the prevention part of it is to just not get into that positions right at the beginning. Yeah.
Which is probably a difficult thing to do if you're a trader, right? Not to get in. The market always finds a way to, for lack of a better word, suck you in, to encourage you to put on a position. And especially, like myself, I always have a position, so Mr. Market sometimes calls me, but I don't think I'll ever experience that being in office for 40 hours because Bursa Malaysia actually does shut, so hopefully they do not extend their hours anymore. It's as good as it is. But back to David's story, I think sometimes with regards to black swans, you can see it brewing in the market. It just doesn't happen. And prior to the announcement by Indonesia to ban exports, and one of the reasons why they did it was food security. And leading up to that, they had there was the Russia invasion of Ukraine. So prices were already started to become volatile. Palm oil at the time was already trading at record highs. And I think a lot of people looked at that chart and say, hang on, this will never happen, right? And obviously, like I said earlier on, the market can remain irrational, then you can remain liquid. So, that's... so the only way to do that is, I think the liquidity was out of the market. One of the key things which I do teach the FTAP students is, just look at open interest, have an idea what's going on, look at the order book, the market microstructure, and they keep on wondering why on earth on day one. I just send them like sheets and slides full of it, and I think hopefully now they, understand better thanks to, to the Meet the Pro session.
All right. That wraps up our Meet the Pros session. Thank you guys for sharing. This has been a really great knowledge sharing session. I hope some of you guys, if not all of you, take something and hopefully trade Bursa. Anyway, so thank you guys. Daphne, I'd like to pass the floor back to you.
What an insightful and engaging session that was. Let's give a big round of applause to our esteemed speakers and our moderator of today's Fireside Chat session. We hope you'll find the session as enlightening and inspiring as we did.